Okay. Mic एक मम्मी तीन जगह मान करे हाँ और मम्मी ते खाने एक प्रोडक्ट करना हाँ okay, so until they come and set it up, let's start. Very good. I mean, very happy New Year to all of you. And I heard that there are some new students joining in from this session onwards. Can you please show your hands, those who are joining for the first time? Up, I cannot see. 1, 2, 3. So actually, we have covered so much in our syllabus. The microeconomics, the entire part has been covered. And we also started macroeconomics. Because our sessions went quite very fast, we covered 4 hours every week. So now we are quite reaching the end of the syllabus. But lecture material and the videos are uploaded. I hope you all can go through them and get an idea. And if you have any questions, you can always ask. Okay. Are there any more students other than you guys who joined recently but who didn't come today? Do you have no idea?
Miss Methma, this is Janet from online.
But please make sure you come for every lecture, at least from now onwards, so that you can, cover up whatever you left last. Okay. And I told you all to do the first assignment, individual assignment. Initial deadline is set for second, but I forgot to upload the link. Then second morning I uploaded the link, but then I discussed with the coordinators here and decided to give one extra week in case if you all were struggling to find the link to give upload the assignment, but some of you all have even emailed me. So I told the ones who emailed me also to upload to LMS. I replied to their emails. I hope you all got it. Right? I hope everybody uploaded your assignment to the LMS because the coordinators told me not to accept assignments via email because it's difficult to track. And in case something happened or if you miss it, then there will be an issue. Right? So all of your assignments should be uploaded to the link created in the LMS, right? So it is open until tomorrow, 9th. I gave 1 week extension. The thing is, it's very difficult for me to, pass a message to you all because I don't have any contact of you all. I wanted to contact you guys, but I couldn't. So, and the campus also closed the week before. So do you all have a representative? So in case if I want to give a message, I can give to that representative so that you all can share with each other. I know you all have a WhatsApp group or something like that. So do you have a coordinator for your batch? Is that a coordinator? You are the coordinator. Okay. After the lecture, can you share your contact details with me? So I hope did you all have any issues in doing the assignment? Any issues? Don't ask me the answers to the question. Other than that, any other issues? If you have, you can discuss with me today because even until tomorrow you have time to upload this. So if you have any questions, you can discuss it. Okay, good. And also I gave you all an homework from this lesson. I hope you all did it. Like I intended to do it as a group work last week, but then we didn't have time to, group and do that discussion. So I told you all to do it individually at home because it was reading. Thank you. It was reading some මොකද්ද වෙලා තිබුණේ? Connection loose වෙනවද? මොකක්ද වෙලා තිබුණේ? Okay. Okay. Hello? Hello? හරි හරි. දැන් හරි. thank you. Okay, so did you all do the homework? Do you remember that I gave something like that? You all had to read some pages of the textbook, which is also uploaded to LMS. And you all are supposed to summarize the historical evolution of macroeconomics, right? The ones who did it, please raise your hand. Properly, the ones who did it. I mean, don't be shy because you all did it, right? You all have to, praise yourself. Uganda's team finally was the paper writers. He gave the fee. What about others? Now, the thing is that is also part of your learning outcome, right? I don't have time to, explain this case. It's clearly nicely explained in your textbook. So you all are supposed to read it and summarize a note for you all. Right? As I've been telling before also, this is a very vast syllabus. Microeconomics, macroeconomics, everything put together, there's so much. And usually in universities, this is taught as separate subjects in 2 semesters. But we are summarizing everything together for you all. So we don't have time to go through each and every detail. So there's a lot of self-studying you have to do. I've been constantly telling this because it's very important for your assignments, for your exams and everything. Right? So it's your responsibility to do these tasks, small activities I do, because that is definitely needed for your evaluation exams and everything. I'll be testing you on those aspects. Right? So even if the ones who did it, very good, you all can keep it as a short note and study for your exam. Others, please do that. Right? For yourself. Okay, so I'll not be going through that today. The ones who did it can show me during a lesson time. So this is the homework I gave. So I'll be moving forward because we have a run or a marathon against time. So like there's so much content to cover, even in macroeconomics. We're a little lagging behind also, like because even though you all are exempted, some things you all don't remember or you all don't know. So we have to cover some of the basic concepts also while moving forward. So some places were a little slow, right? But we'll try to cover up everything somehow by the end, right? Okay, so can we quickly recall what we did? Now you're coming after a long break. So I wonder whether you have the memory or I don't know. So can we quickly recall what we have learned in the previous session regarding macroeconomics? What did we learn under the introduction to macroeconomics? What did we learn on the introduction to macroeconomics? Quickly. What did we first learn? Okay, at least the ones who are present and work present, something like that. You were also not there. The ones who were there, please tell me. Yeah, of course, we discussed the definition of macroeconomics, right? What else? The difference between microeconomics and macroeconomics, because we were stepping forward from microeconomics. That's what we have done so far. So from there, we took a step to macroeconomics. So we learned the difference. What else? Components of macroeconomics. Someone else? You want to add? What did we learn? So macroeconomics versus microeconomics, the difference we learned. And also we learned the importance of macroeconomics, why it's important for us to study macroeconomics. And then only we came to historical evolution. Okay, that you were supposed to do as a self-study. The ones who did it would know what is the evolution. The ones who didn't do, would not know. Okay. Now we are going to move towards real and monetary flows in the economy. Actually, this is part of this explains the broader view of macroeconomics. Or in other words, I told you macroeconomy is a situation where we looked at the economy from the helicopter, right? From the top, we are looking at the entire economy together. That is what we meant by macroeconomy, right? So how we look at the economy in this helicopter is explained through this real and monetary flows in the economy, or we call it circular flow diagrams, right? Have you learned about circular flow diagrams before? No? Huh? Circular flow diagrams, have you heard about it before? Have you learned it before? Those who have a slight idea or like slight memory about circular flow diagrams, please raise your hand. I suppose, okay, whatever your extension, I suppose you all have done A levels, right? So first A levels, sure you did this. Okay, so in that case, I'll try to quickly go through, but please recall your A-level memory at least, right? And this comes here because I don't know, in your syllabus course outline, this was mentioned there. And also this is helpful for the future lesson as well. So you need to know about this, right? So this is, as I earlier said, this is the way that we look at the economy in a helicopter view. So previously also I said there are three main agents in an economy, right? Who are the three main agents? Households, business or firms, and then the government, right? So these three agents are there in the economy. So can you tell me who are households? Who are households? Sorry? Individuals. Individuals who are living individually or as a family in a household are called households, right? And firms are what? Businesses or who engage in doing business. Either they are engaged in production of a good or service, or they are into sale of a good or a service, right? Then you have government, and also there's another component. Now, in a single economy, these three are the economic agents, right? But when you look at the helicopter view, right, other than this households, business sector, and the government in one individual economy, there's a foreign sector also who come into play, or we call them rest of the world. So this is in one economy, the economic agents, and anybody outside this particular economy is called as rest of the world, right? And households and firms, or households and business sector together is called the private sector, right? Households and business sector together is called the private sector. Government is called the public sector, okay? And then you have the foreign sector also come into play, right? So now we are going to look at the bigger picture. So in order to study about the bigger picture, we use this model called circular flow model. Okay? So circular flow model is the macroeconomic activity which is used to identify the economic interactions, economic transactions, sort of the relationship these different agents in the economy has. We put it in sort of a framework, and that is called circular flow. Okay, and this model has it starts with a very simple model, right? Which we call two-sector model. Then it moves to 3 sectors and 4 sectors, and it kind of gets complicated along the way. But we start off with the most simple, the two-sector model. Okay? And if I show it to you like this, do you remember now? And you don't know the name of it. Okay, the circular flow model is this. Okay? Now, in a most simple economy, we assume in the simplest form of the economy, there are only 2 sectors in the economy, right? That is households and the firms. Okay. So you have households and then you have firms, or rather business sector you can call it. Okay. So in any economy, these 2 parties do interact with each other, right? Why? Why do these parties interact with each other? For what purpose? Sorry? To fulfill their needs. Okay, right. So households, as I earlier said, they are individuals, right? They are people who are living in the society, right? So they have needs and wants. They want to satisfy their needs and wants, and for which they need goods and services. So they buy goods and services from firms, right? Firms produces goods and services and supply to them. So there's a very common basic relationship between firms and households in an economy, right? And economy has large amount of households and large amount of firms as well, right? And we usually term it as that they have 2 flows to each other. That's what we mentioned earlier. These 2 flows, real flow and a monetary flow, right? And these households are the individuals, right, in the economy. What resources do they own? What sort of resources do they hold or do they own with them? Yeah, obviously, individuals or households, human beings like you and me, we all have the labor resource, right? That is one resource we own, we hold. What else? We also own land, right? It can be land, houses, it can be, like any farms, cultivation sites, any mineral deposits. We own land as well. We own individuals, households own land. What else? Capital. We also own capital. Savings, investment, any money we hold, or any gold, or any other valuable assets we hold are called capital, right? What else? Entrepreneurship. That is an intangible asset, right? We hold the entrepreneurship ideas, skills, knowledge, intentions, things like that. So what do we call these things? Land, labor, capital, entrepreneurship, what do we call them? Common name? Sorry?
Economic resources.
Yeah, you can call them economic resources. Any other term? Factors. Factors of production. Do you remember? We call them factors of production. So there are mainly 4 factors of production: land, labor, capital, entrepreneurship, right? So individuals or households own these factors of production, right? They are the ones who have the ownership for that. Okay. So what these households do, now these factors of production, does it mean anything to them individually? You have your labor individually, you have your land individually, capital, entrepreneurship. Not everybody has all 4. Different people have different resources. They own different factors. So individually, does it make any sense to hold on to them? No. Who needs these factors of production? Firms, or rather producers. They need them to produce their goods and services. They need land. They need land means not only land per se, but it generally means all natural resources. All resources belonging to land. So all natural, you need natural resources for production of goods and services, right? And then organizations need labor in the process of producing goods and services. They need capital, money, investments to invest in their businesses. They need entrepreneurial ideas, skills, talents, intentions in order to, create a business, to come up with new products, to build a product or a service. You need entrepreneurship ideas. So they collect these factors of production from various households. Okay? They bring everything together, and they are the ones who are engaging in producing goods and services, right? So because they need it, they take those factors of production from households, right? So households sell these factors of production to firms. Okay. So when you transfer these factors of production from households to firms, there is a real flow of factors of production which is happening from households to firms. Is that clear? Real flow means it's moving from them to them physically. Really, the product is moving. Rather, the labor is really moving. The natural resource or land is moving, capital moving. So there's a real flow of factors of production from households to firms. Is that clear? Right? So firms will buy these factors of production from households, and for which they have to make a payment. Right? They don't give them free of charge, so you have to make a payment. So what is that payment is called? Sorry?
Monetary.
Yeah, that payment is called monetary flow. Okay. So that is monetary flow. Money will flow backwards to households, right? So how do they pay? Now for labor, how do they pay? What is the payment for labor? Wages, or in other words, salary, you can call it wages. Okay, what else? For land, what is the payment? Economic term, we call it rent. But not always all the payments are rent. But economically, the payment related to land is rent. Then for capital, interest. Then for entrepreneurship, profit. The entrepreneur who would start the business, do the business, the return they get is profit, right? So that is the payment for each of those factors of production. For labor, wages, land, rent, capital, interest, entrepreneurship, profit. What are these called? What is the common terminology for this? What is the common terminology for this? Those are factors of production. What is this? Factor payments. Common terminology for this is factor payments. So these are called factor payments, right? So factor payments will go back to households as a monetary flow in terms of money, right? It will flow to households. That's how households earn an income. They earn an income by selling their labor. If they are rich, if they have land and a lot of other things, they will sell their land and earn an income, or they will sell their capital and earn an income. Some people decide to do business, use their entrepreneurship skills and earn an income, right? So that is how households earn an income. Is that clear? Right? So factors will move to firms and firms will pay for it. So using these factors of production, firms will engage in producing goods and services, right? They will produce goods and services. So once they produce goods and services, to whom are they supplying these goods and services? Consumers, or rather households, right? So there's another real flow of goods and services which are happening to the other side. So they will engage in production, and those produced goods and services, they will sell it back to households, right? So goods and services will again move this way. It is also a real flow. Is that clear? So households will buy these goods and services in order to satisfy their needs and wants, and for which they also have to make a payment, right? So they will make a payment to firms on behalf of these goods and services. They pay a price for it, right? And that is also monetary flow. Is that clear? So out of the income they generate, they have income which they generate by selling their factors of production. Using that income, they pay for goods and services, right? So this is the most simplest form of an economy where there are only two sectors involved. Okay, we call it two-sector circular flow model. Is that clear? If you want, you can quickly take down any information you require. And in this situation, do you agree if I say that both this economy is in equilibrium? If I say this economy is in equilibrium, do you agree with that? Because for the total, for the entire factors of production which moves this way, you're making an equal payment. So this flow to this flow is equal. And using all those factors of production, they produce good and service. And that goods and service will flow this way to that equal value of paying a price as well. So there's no external leakages of this economy. Both flows are equal. They actually තමයි scientific calculating. Value is circulating inside this, nothing goes outside of the circular flow. Economy is in equilibrium situation, right? Because here we are assuming the total income households earn by selling their factors of production, that total income they use, and out of the total income they buy goods and services, right? So there's an equal flow both ways in terms of value. Is that clear? Therefore, economy is in equilibrium situation. Okay. Okay, so this is a two-sector economy where there's only households and firms in the picture, right? So now I'm introducing a separate entity to this system, okay? That is called bank. It's a new party introduced to this simple economy where banks come into play. Now that is happening in a situation where, let's say now this is income of an household income denoted by Y. If you spend your entire income on consumption, right? The income is entirely spent on consumption, Y equals C. That means this economy is in equilibrium situation. Total income you generate, you spend on consumption activities, right? But what if somebody decide I'm not going to spend all the money I earn on just consumption. I will try to save something for different purposes, either the future or for investments or as a security, social security or something. For some reason, people decide to save part of your income, right? SC is denoted by SC savings, right? So then your total income is divided into two parts, consumption and savings, right? So consumption will be the only part which you spend back on firms. Do you agree? So out of the total income they generate here, consumption expenditure is the part you spend on goods and services, right? Balance savings, where does it go? Usually people save in banks after the banking system was introduced. People save their money in banks because you can generate an interest for that, right? So part of their income, part of Y as savings goes to banks. Okay, households save their money in banks, right? So can you see now their income gets divided into two parts. Only part is going back to firms as consumption expenditure. The other part is going to banks, right? So the firm does not receive the total money they spent on households back from households. Do you agree? Now earlier they bought factors of production, they paid for factors of production. So for example, let's say they bought 100 worth of factors of production, right? They paid 100 of value. Let's assume it's $100. The easy reference. They paid $100 as factor payments to households, right? And they expected that entire money to come back to them. Okay, but instead, consumers or households decide only $80 they will spend on consumption, right? So companies or firms, businesses spend $100 on households, but they receive back from households and only $80. There's a $20 lack, right? Then what will happen? Firms will face the crisis in the longer term because you spend more, but you receive less. So there's a problem in equilibrium from the firm's side, right? They cannot run their business. You spend more, but you receive less. So for that purpose, now banks are the ones who are collecting that savings portion of $20, right? So then firms will go and ask money from the banks in terms of bank loans or in terms of other investments. They ask the balanced amount of money from the bank, right? So banks will give money to firms in terms of, we call it investment, right? That's why any business organization in any economy has a bank loan component or like some other investment component, because the total expenditure they spent on factors of production, they can't recover by selling goods and services. They need extra money as investments. That's why they're asking investments from banks in terms of banks loans or in terms of share capital, in terms of debt capital, they raise funds. Because to bridge that gap of the money which does not come back to them from the households as sales of goods and services. Is that clear? Right? So it's a very complicated situation out there, but it's explained in the simplest form here. Do you understand? The ones who are at the back, right? So banking system, when they come into play, there is a, we call it, there's a leakage out of the system which is happening. Earlier, there was no leakage. Income was entirely equal to consumption. But when savings come into play, savings will become the leakage. It leaks money out of the system, right? External part, the system has two economic agents. Economic agents are households and the firms. So there is a relationship or transaction between these two parties, but third party, which is the bank, come into play and leak or they grab money out of that system. So the bank has created a leakage, right? So savings is a leakage out of the circular flow. And investment come back to the circular flow as an injection, we call it. Okay? So savings will go out of the flow, which is called leakage. It's a leakage from the circular flow of economy. And investments come back into the circular flow. We call it an injection. Is that clear? Okay. So if you want, you can put bank also in between and draw that part. So that is two-set economy with the banking system. Okay. When the bank come into play. If there's any question, please ask. You all have covered this for your A-levels, so I'm just, recalling your memory. But if you need any further clarification, if you're confused, you can always ask me, okay? So the same thing is explained in a more simplified way without any pictures or anything. Okay. Okay, now we are going to introduce another sector to this economy, right? That will be the government sector. Okay. So can you quickly take a look at this framework and see whether you can see where the government sector is? The two parties of the basic economy is household and the business sector, right? So they have a relationship. Business sector, households provide factors of production, right? And they provide factors of production in the factor market, we call it, right? Where the factors of production are bought and sold is called factor market, okay? And businesses will pay money for that factors, which is called factor payment. And businesses will produce goods and services and they will sell those goods and services to households in the product market, and for which households will pay for business sectors, which is denoted by here consumption expenditure, right? Then the banking sector is also shown here. They have termed it as capital market, where the capital or investments are provided. So as I earlier said, households, the balance money they have out of the income, which they don't spend on consumption, they save in the capital market, which will come back to business sector in return called investment, right? That is that. And now you can see the third party to the economy is introduced, who is the government sector. Now, what is the role government plays in an economy? What is the role government play in an economy? Okay, they facilitate or they provide infrastructure facilities to an economy. What else? Sorry?
Pricing.
Okay, so they set up price ceilings and they, regulate the market and all of that. So those are roles of the government, right? Now, how does the government operate? What is the main way the government operates? Yeah, so government has so much of expenditure in the sense they have to provide so much of services and welfare activities they have to do to the society, right? Now, in a private economy where there's no government, everything is bought and sold for money. So if you have money, you buy uh, goods and services to satisfy your needs and wants. But also, there's a part of a community who cannot afford all goods and services because not everybody has the equal ability to consume, right? So government have to support these less fortunate people by providing certain goods and services at a subsidiary rate or free of charge or something like that. Now, for example, in our country, education, health, and some of the services are provided free of charge. So government is spending on those services, right? So government has to play that role to provide welfare to the society, which will not be offered in a private economy, right? So government comes into play to provide, simple purpose of the government is to provide welfare to the society, right? So in order to provide welfare, they have a expenditure they have to incur, right? To provide welfare, they need to have money, right? So they collect money in terms of what? Taxes. Through taxation only, government collect their revenue in order to spend for welfare of the society, not to spend on themselves, right? So they have to collect money, taxes to spend on welfare, right? So government collect taxes from the private economy. So from whom do they collect taxes? mainly from the firms, business organizations, because they generate profit, they have money to pay. So from them, you charge taxes. Then who else? Individuals, households also you collect taxes, right? So taxes can be collected as indirect tax or direct taxes. So somehow they collect taxes from both firms and individuals, right? So they grab money. Okay. So now circular flow earlier was at an equilibrium where your income was equal to consumption. But now let's assume government come into play. What will happen? Your income, now you have to divide between many parties. The income generated by consumers, they have to spend on consumption. They also would like to save some amount. Plus, they also have to pay taxes to the government. So your total income gets further divided. There's another part going out of your income, which is called taxes. Okay? Because you have an obligation to pay tax to the government, you cannot spend all your money on consumption. That means firms do not receive another portion of consumers' income because it goes as taxes to the government, right? So there's another leakage out of the system. What is that next leakage? Tax becomes another leakage. From the circular flow, tax goes out, right? So it becomes a leakage from the economic system. Okay, so tax become another leakage. So let's say government is here. They pay taxes to the government. So from the circular flow, tax goes out, which is a leakage. Again, this is a leakage, right? So government will collect these tax money and they will study in an economy who are the ones who deserve the benefits the most. They will pick the less fortunate people, right? It can be individual households or they can pick firms also like the business organizations who are struggling. Let's say like small and medium scale entrepreneurship or so for the businesses who are struggling, who try to start up their businesses, they might support them using that tax money. Or they might support the less fortunate people, individuals in the society. Right? So somehow the collected tax amount, they will spend back on either households or firms. So even though that money goes out from the system as a leakage, it will come back to the system as we call it subsidies. That's what governments do. They provide subsidies to the economy. So that will come as an injection, right? So there's a leakage from the system, which is called taxes. Then there's another, somehow that money come back to the economy as subsidies, which is an injection to the circular flow. Circular flow will come back to an equilibrium situation. Is that clear? Okay. So that is what is explained here in this diagram. Can you see whether you can understand that? If you want, you can make any notes. So here they have shown the taxes, how households pay taxes to the government, how business sector pay taxes to the government, how the money come back as transfer payment. And the other thing is that now here they have now government pay direct transfer payments or transfer payments can within subsidies, right? So they pay subsidies to the business sector as well. But also government also has certain needs and wants, right? In order to run the government, they also need to purchase goods and services. So from whom do they purchase goods and services? From the firm, from firms. To run a government, they need vehicles, they need fuel, they need electricity, food, water, everything. So they buy it from the business sector, right? So they using that tax money, only they buy it. So we call it government purchases. So tax money come back to the economy as government purchases from the firms as well. That's what is shown here. Government purchases. Is that clear? Any questions? Okay. If not, let's move to four-sector economy. Can you just take a look at this diagram and see whether you can find the fourth sector? Who is the fourth sector? Foreign sector, right? So other things are the same as before, right? The only new addition is the foreign sector. So who is the foreign sector? Yeah, anybody outside the country. So this come into play when your economy becomes an open economy, right? So far we assume your economy is a closed economy. You had households, firms, government, banking system, everything inside the economy, and you were a closed economy, right? But the moment you open up your economy to the external parties, you become an open economy. That is where the foreign sector will come into play, right? So when foreign sector come into play, what will happen? What are the two new additions to the economy? Imports and exports, right? You try to import goods and services which are not produced locally. And also, if you have any excess production, you try to export to the foreign sector. Okay? Now, can you tell me what will import be? Will it be a leakage or investment to the circular flow of economy?
Leakage.
Leakage. Why? Sorry? Why is it a leakage? Yeah. So ideally, you were supposed to spend your total income based on the initial plan only on the firms who are in your country, right? But now, your income, okay, you have to spend on consumption, on buying goods and services from the firms who are locally there. Plus, you have to save some money. Plus, you have to pay taxes. And also, now you try to spend some amount of your income, part of your income, to buy foreign goods and services, which you can't buy locally. People tend to do that, right? Like if you can't find some goods and services in Sri Lanka, you try to buy it from outside abroad, right? So you spend part of your income now on imports as well. In economics, imports are denoted by M. I is for investment, so M is for imports, right? So you now spend your money on imports. Okay? So further, the amount of money you spend on local firms get reduced, right? And imports become a leakage out of your economy. So import is a leakage. Okay? So let's say there's a foreign sector, and from the circular flow, imports will go out as a leakage. Okay? So you will spend your money on buying foreign goods and services, imports will become a leakage. And this foreign sector, but also for every leakage, there should be an injection. Okay. So what will be the injection? Exports. So in order to buy, you spend, in order to buy import, you spend certain amount of foreign currency. Now you have to earn that foreign currency. So the firms, okay, these local firms who could not sell their products to local consumers, they will have excess production, excess product. So now they will try to sell it abroad and sell it in another country and earn revenue. Clear? So that will become, so they will send, products abroad and earn an export income. Okay? So exports will come into the circular flow of economy as an injection. So the total amount of money you spent on imports ideally should come back to the economy as export income. Is that clear? Now the problem in Sri Lanka is that, right? Ideally, you're supposed to produce goods and services, sell it abroad, and earn an export income. Let's say we sold $1,000 worth of goods abroad and earn $1,000. Only using that $1,000, we can import goods and services. Then the economy is in equilibrium. Export income equals import expenditure. But what happened in Sri Lanka? We sell goods and services outside and earn export income of $1,000, but we spend about $100,000 on import. Not anything we earn, but through borrowing, through loans. You borrow money, keep on borrowing money, and using that borrowed money, satisfying your consumption needs as imports. That has accumulated over time, and this crisis has happened. Otherwise, if you properly run the economy nicely, always economy should be in an equilibrium. Okay. So is that clear? So now you can see the foreign sector has again created another withdrawal, or rather, withdrawal is also a same term as leakage, right? So it has created a leakage and also an injection. That is the four-sector economy, the most complex type of the economy, explained in a very simple form. Is that clear? Do you understand this diagram? Sometimes you might have to draw these diagrams and explain the relationships in the exam. Okay? If you want, you can take down anything. Okay, now let's take a look at what are injections and what are withdrawals. So here withdrawals means leakages. Don't confuse. Withdrawals is equal to leakages, what I spoke about earlier, right? So you can just write down a sentence there, a common definition, introduction to these injections and withdrawals. Injections and withdrawals. Injections and withdrawals. Withdrawals within brackets, leakages. Withdrawals means leakages. Within brackets, leakages. remove the equality in the economic system by either injecting or withdrawing money from the circular flow. That's a common introduction to injections and withdrawals. Now take a look at what is mentioned here. Injections can be defined as income received by economic agents that does not arise from the spending on the other group. Is that clear? Does it make sense to you? So earlier in a normal economy, there are only two parties, firms and households. Ideally, firm is supposed to spend all their money on households. Households are supposed to spend all their money on firms. They have a very good relationship, right? So if they spend on someone else other than the other party, that becomes an injection. Clear? It's like a husband and wife relationship. Husband supposed to spend on wife is supposed to spend on husband. If you spend on someone else, that creates a leakage from the system. Clear? So it's similar scenario. Household supposed to spend only on firms. Firm is supposed to spend only on household. And if there's any, any extra payment outside those two parties, that creates an injection. Okay. Yeah, so this injections are income received, withdrawals are withdrawals can be defined as income received by an economic agent that is not passed on to the other group by buying goods and services from it, right? So that is also called as leakages, which is an outflow. So there's the outflow and inflow. So injection is an inflow to the economy. Withdrawal or the injection is an outflow from the economy, right? So usually households are supposed to spend on firms, but if they don't spend on firms but spend on something else, that creates a withdrawal from the economy, and that comes back to the economy as an injection. Is that clear? In order to maintain the equilibrium in the economy. So in this table, the types of injections and withdrawals in each sector is shown. Take a look at it. In a two-sector economy, with the introduction of the banking system, there's only one type of injection and withdrawal, investments and savings. But in a three-sector economy, when the government come into play, you have government expenditure as an injection, tax as your withdrawal. When the foreign sector come into play in the four-sector economy, exports and imports come into play. Is that clear? So try to remember this table. It's easier to remember it like that. Okay. Any questions out of that? Any questions? Okay, so let's finish that lesson there. I mean, introduction to macroeconomics. So you can read more about this through your recommended text, right? There's one book which is uploaded to LMS, but there's another book which is there in your course outline entirely on macroeconomics. Try to find that also. I don't have a soft copy of it. So try to find the hard copy of that book and read. It will give you a better understanding about these models, circular flow and everything. So read. Okay, now let's finish it there and move to the next lesson. Do you want to take about 5 minute break before we move to the next lesson? Okay. So just let's take about 5 minutes and we'll start next lesson. Just 5 minutes. Okay, now there was a small discussion regarding the assignment. I mean, there will be another assignment, like a midterm test, right? You all were informed that we will have a midterm test, MCQ test, right? So earlier plan was to have it next week, okay? But then now since one thing I extended your individual report also to tomorrow, I can extend it from another week. Okay, but it comes at a cost also. Like if you're having it next week, you will get questions only up to what we covered last week. But if you have it the following week, you will get questions up to what we covered today. Right? Today's content also will be included. What do you prefer? Next week or the following week? And anyway, there are some other things which have to be settled also. Now, the thing is, there are other students are joining from abroad now. So, we have to look at a way how we are going to have the exam for them as well. Now, they have a time difference issue and all of that. Whether they can log in at the same time and do the paper is questionable, right? So in that case, we might have two papers for two batches, or it can be an LMS based exam where the questions will be picked on from a question bank. So not everybody will get the same paper, it will be different for each and every one of you. So I have to discuss those arrangements with the management here and decide. Anyway, I prefer to have it not next week, the week after.
Speak about it's formal. You don't have campus Sunday.
It was there in the schedule, right? It's going to be on Saturday. I think from next week our session moves to Saturday, right? Saturday for 2 hours. So 4-hour sessions end today. From next week onwards, your principles of economics will be on Saturday for 2 hours. So what do you say? It will be an MCQ test for sure, and you will get about 20 questions, right? Timing hour or less than an hour. Okay. When it's not, I don't know whether it will be a paper-based. I was planning for a paper-based exam, but if we have to incorporate coincidence also and have it at the same time or something, we have to make it LMS-based. Then it can be LMS based also. Okay, so I will inform all the details next week, but for the moment you start studying. Anyway, even last week I told you all to start studying, no? During the holidays also, please study because you will have your midterm test very soon, I told you. එනිසා මම හිතනවා දැන් හැමෝම පාඩම් කරලා ඇති කියලා. මේ තව බෝනස් වීක් එකක් තමයි ලැබෙන්නේ ඔයගොල්ලන්ට. Okay. What do you say? Is that okay? So to set up it for now, next week is when? Next week will be, we have the lecture on 14th, no? Not 14th, but on the 21st. I'll let you all know exactly whether we are going to have it during class time or another time. I don't know whether you have other times, right? In your timetable is packed, right? Fully. Is there any like slot which is free? I like not to have it during class time so that we can do our syllabus, cover the syllabus, have it on separate time. But do you have any free slots on Saturday or Sunday? In your timetable? Where I can take about 1 hour? Yeah, madam. No. Now, what time does your lecture start in the morning? 9 to? Huh? Oh, 9 to 12. It was the hours of 1 to 4, 5. I'll discuss with the coordinator also and see. වෙලාවක් නැති වුණොත් we will have during our class time. වෙලාවක් තිබුණොත් I will give those hours to cover the content and have the lectures on at different times. Weekday is not possible, no? Any possibility during weekdays? Are there typos? But that is next Sunday, no? No lecture, no typo. Who celebrates typo, girl? Huh? Yeah, both of them, they father. Actually, the ones who celebrate typo, girl. There's only one. One is another one. Okay, let's see. I will discuss and see. Anyway, I'll give you another 1 week, so it will be next week, the following week, right? So study and keep. Then you have to study the content up to today. Like all what we cover today also you have to study. Okay? Okay.
How much marks for the teacher?
20. 20 questions, 20 marks.
And the
Which assignment?
ladies of science.
10. Individual assignment 10. There's another group assignment to come. You all know that, no? In the course outline or something there. So group report and a group presentation will be there towards end. After the midterm test, I'll inform you all about that. Okay? So I think you all were summarized about that on the very first session. Assignments මොනවද තියෙන්නේ කියලා? So individual assignment, then midterm test. Individual assignment will be 10%. I don't have the course outline now. So individual assignment 10%, midterm test 20%, in group report 10%, group presentation 10%. Altogether 50, no? 50% from assignment. You are lucky, you know, getting 50% from the assignments and 50% only from the exam. බොරුවක් කරලා 50% pass වෙන්න පුළුවන් නේ? Yeah, 30 marks were there, but it will be converted to 10%. 30 marks for individual components, but converted to 10%. Okay. Okay.
Excuse me, madam.
Any question? Any questions?
Excuse me, madam. Hello.
Anything? Sorry?
Excuse me, madam.
Ah, yes.
Madam, what will be the normally sub topic weightage for this MCQ question, madam? Because the last week session was not available in LMS.
Sorry, I cannot hear you clearly.
The subject weightage for the MCQ question, madam, because the last week session was not available in LMS.
Sorry, last week.
Session was not available in LMS.
The recording.
The video. Uh-huh. I'll check with the IT person. Sandhu is the one who's uploading it, right?
No, they said that we checked, madam. They said that due to some technical error, video was not available.
Video was not available.
Yes.
It hasn't got recorded.
I think it has got recorded, but they have not uploaded. No, they said record.
Why is that?
The full day session was not recorded, madam. The morning session and afternoon session both were not recorded.
Sorry, but I cannot hear. I cannot hear them. Why is that now? Earlier it was very audible, no? Why?
The full
They
day
were-
session was not available, madam. Morning session and afternoon session both were not available in the LMS. They said that it was session was not recorded or something.
Last week session not available. Morning.
Yes,
Both
yes,
sessions.
morning and afternoon both sessions.
It hasn't got recorded. Some
Yes,
issue. They know what to do. Usually it was on, like that day it was on and it was getting recorded. I don't know why it was not saved. I'll check with IT about it and see what we could do. Let's see, will you know what to do with it?
Okay, madam. Thank you.
Okay, I will check on that. Now today it's probably, last week also it was recording, properly. Recording the way that. Record වෙනවද?
Yes. They're inside.
Sorry?
What right hand side corner?
Yeah.
The left hand.
This is the no? Anjali, yes. Even last week on was recording, right? Okay. Let's see, will you? Okay, so let's start this other new lesson, which is national income, economic growth and development. Right? So it is a continuation of macroeconomic, and the circular flow diagram which we learned would be useful here as well, just to get an idea. Okay. These are the learning outcomes, and there are a lot of learning outcomes out of this lesson. So I will try to cover as much as possible today, and we'll see how we are going to take it forward next week. Okay. So quickly just read through these learning outcomes and see what we are going to learn from this lesson. Have you touched upon these topics earlier? In your previous subjects? Okay. So let's assume that we will be able to go faster if you have covered these things. Okay. Okay. Much of the macroeconomic data are from national income and product accounts. Now, macroeconomy is a very important concept for any economy, right? There are so many parties who make decisions based on the macroeconomic data. So who are the parties who make decisions based on macroeconomic data? Firms, individual business organizations. They plan their future activities and so many other things based on macroeconomic data. So macroeconomic data are very important for firms. Who else? Government. Government really needs macroeconomic data because one of their tasks is managing the macroeconomy. So you cannot manage the macroeconomy without data regarding macroeconomy because macroeconomy is a very complex situation. Earlier, when you look at the circular flow diagram, you realized how many parties are there, what sort of interactions are there. So it was presented in the most simplest form, but in usual scenario, it's a huge mess, right? There are so many parties interacting with each other, transacting with each other. So it's difficult to manage it without having proper data, right? Who else? Central bank. Okay. Central bank needs macroeconomic data to manage the macroeconomy. Who else? Who else needs this? Right. Economic analysts would need this data. Okay. Who else? Investors would need this data definitely to make the investment decisions. Political parties also would need this data. Yeah, university students, okay, to do research and all of that, they need. Who else? Tax authorities, yeah, they also need. And also the foreign sector, don't they need? Right? So when they are making any deals or any transactions with foreign countries, the first thing they look at is that particular country's macroeconomic data. If it acts as sort of, now if you take individual firms, right? How do we demonstrate that individual firms' performance, or rather how they are operating? Through financial statements, right? You have your income statement, balance sheet, cash flow statement that represent that particular company's performance, right? Now, similarly, a country's performance is demonstrated through national income accounts, right? So if anybody wants to study or get an idea how this country is operating, they look at the national income account. So these macroeconomic data are very important because there are so many parties who are making decisions upon this, right? National income and product accounts are used to measure the aggregate output of an economy. National income and product accounts represent data collected and published by the government describing the various components of national income and output in the economy. In Sri Lanka, the Department of Census and Statistics is the authorized agency to compile national accounts, right? So similar to an organization for a country also you make accounts annually, and those are called national accounts, right? So we are going to talk about this national account. Now, as mentioned here, in national accounts, what is actually measured, right, is one thing, the national product. What is the total production, value of the total production which is done by this country? That is one thing you account for. Total production which happened in this country during 1 year's time. And also you account for national income. What is the total income generated by this country for this time period? Okay. So you account for your production, how much of the value of products are produced by this country for a particular period of time, and how much of income generated by this country during a period of time. And that is what you account for, saying national accounts. So the main measure, okay, which measures a country's production is called GDP, or gross domestic product. You have learned it before, right? So it's a very critical concept. GDP is a very critical concept because it demonstrates now in an organization, success or failure of an organization, you will decide by looking at their income statement or their financial statements, right? Similarly, a country's success or failure is determined by looking at their national accounts. And the value you mostly look at is this gross domestic product, because it demonstrates the total value of the goods and services this country has produced during a particular time period. Okay? So GDP, read this definition. GDP is the total market value of a country's output. It is the market value of all final goods and services produced within a given time period by factors of production located within a country. The total value of goods and services you produce by using the factors of production belonging to that country. Okay, it will come under gross domestic product. Okay, so GDP measures the total production of an economy. So it actually is like an economy's report card, like how much you have achieved during the time it demonstrates, like a report card. Well, this country is a good country, A grade, B grade, C grade. You can decide it by looking at their GDP. So GDP is a very important concept. That is what we mainly focus on when we are preparing national accounts, right? GDP also measures the economy's total expenditure on newly produced goods and services, or the total income earned from the production of these goods and services. Now, if I tell you GDP means gross domestic product, total, in other words, the total production, total amount of goods, value of the product, goods and services which you produce in that country, right? So GDP, or this production of the country, will be equal to the total expenditure you incur on producing these goods and services. Do you agree? Value of the total products, value of the products that you produce in this country is equal to the money spent on producing that good. Do you agree? The two values are equal. For example, let's say you produce tea worth of 1 million rupees, right? So that 1 million rupees worth of tea is your final value of the gross domestic product. The cost you incur on producing that tea is also will be the same as the value of that product. Do you agree? Total expenditure you spend on land, labor, capital, on the cleaner will be equal to the value of the goods you produce. That's what we learned on the circular law of economy. Total amount you spend, it's always equal. And the value of the goods and services are equal. So the expenditure you incur on producing that goods and services is equal to the production value. And also that will equal to the income you generate from these goods and services. Do you agree to that? Because this is the GDP, total value of the products you produce, and the cost you incur on that, the expenditure is equal to that. And also the income you generate out of that production is also equal to that. Okay. So 1 million worth of tea you sell for 1 million rupees. Right? So income you generate out of that production is also similar to that production value. Okay. So therefore, that is what is explained here. GDP is equal to the total expenditure on GDP, which is equal to total income earned from GDP. So in economics, we say production value is equal to the expenditure value and the income value of a certain stock of goods, right? Production value is equal to the expenditure you spent on that production, which is equal to the income you generate out of that production. Okay, always production is equal to expenditure, which is equal to income. Okay. And in this, there's a concept called national income accounting identity. Now that is similar. Now, when you're doing financial accounting for business organizations, you follow certain standards, no? SLSR, Sri Lanka Accounting Standards, and IFRS, and there are different accounting standards. Similar to those, when you're preparing national income accounting for a country, this is a standard what you follow, which is national income accounting identity. So what national income accounting identity tells is this story. Always, then there has to be an equality in the expenditure and income and the production value. Production value should be equal to expenditure value. That value should be equal to the total income you generate. So that is a concept we follow when we are preparing national income accounts, okay, which is called national income accounting identity. So that's like sort of a standard we follow when we are preparing national income accounts, right? And it talks about this. Always there has to be equality between production value, expenditure, and income. Okay. And accordingly, there are 3 approaches to calculate GDP. These are the 3 approaches. Now we say if you take the production value, it equals to expenditure value, it equals income value. That means you can calculate the gross domestic product of a country, or you can prepare the national income accounts in 3 different approaches. Either you can look at it from the production approach, production of goods and services. That approach you can look at something. Similarly, you can look at GDP from the expenditure approach, the expenses you incur on producing those goods and services. Also, you can look at the same GDP from the income approach, total income you generated out of those produced goods and services. Can you identify the difference? One side you look at production approach. Production, how much of what sort of value of goods and services I produce. That way you can account for GDP. On the other hand, you can account for GDP by looking at the expenses we incurred in producing these goods and services. On the third angle, you can look at what is the income I generated out of these goods and services. By totaling of the income values, you can also derive a GDP. Okay, so GDP can be derived in 3 approaches: production approach, expenditure approach, and income approach. So that is what is explained here. Can you quickly read these three? Yes.
Same national income is coming, right?
Yes, same value should come. That is what this standard says. National income accounting identity says, whichever the approach you take, because of this equation hold true, always whatever the approach you take, final value you generate for GDP should be equal to each other. Okay? The production approach here aims to measure output, intermediate consumption, and ultimately the gross value added of every economic activity and every institutional sector in economy. So using that, you can calculate, derive at GDP. Then expenditure approach, look at the summation of expenses incurred by households, business, government sector in producing those goods and services. Again, you will end up at GDP. Then from the income approach, you sum up the factor prices, factors of production. Remember, land, labor, capital, entrepreneurship, the factors of production, how much income generated out of that. So that is spent on producing goods and services. So you total up that amount, the final value you get will be equal to GDP value. Okay. So we'll look at these approaches separately. Now when you're calculating the national income accounts using these three approaches, sometimes there can be situations where there can be double counting errors. You may count certain things double, right? So first of all, let's look at ways how we can avoid double counting error. Okay. In one situation where the double counting error could happen is counting the value of final goods and services, not the value of intermediate goods. Now we know in an economy, there are multiple economic activities happening at the same time, right? And sometimes some products you produce will become an intermediate good for another product, right? So let's say you're going through production approach. So you have a firm and you tell the government, this is the total value of the goods and services I produce. And government collect that information. And you also have another firm. You tell this is the total value of goods and services I produce during this year. So government collect all this information from individual businesses. And they sum it up, let's say. Now what happens is, if his product becomes an intermediate product for her production, then his value and her production is becoming double count. Because he also has separately reported the value of the goods and services he produced. Now when she is reporting the value of the final product she produced, this is also included in it. So this has been double counted in your accounts. So that is the problem. Because government doesn't know which product becomes the intermediate product or what product. You can't really track. Okay? Because some products, even if you think this is a final product, sometimes it might be used in producing something else. So for example, let's atlas, right? Books, pencils, pens, and all of that. So that's a final product. Nobody uses a pen in producing another product. You use pens and pencils to write or something. So you get final value of sales of atlas. But some other company They also might be purchasing stationery from Atlas. That is not a direct input for their final product, but it comes under the administration expenses. They have counted it in their financial statement, which has gone as an overhead expenditure in their final valuation. But nobody thought that it will happen. So, if you take their final value and Atlas final value, ultimately this has been included in their statements as well. So it has been double count. The government can't track it. You never know which product becomes intermediate or bulk product. So therefore, if you, so one way is count, if possible, count the value of only the final goods of in your GDP calculation. But as I said, it's not practical to segregate what are final goods, what are intermediate goods. If you can segregate, only take the final goods values. Don't ever take intermediate goods values in your national income account. But as I earlier said, it's not easy to do that. Okay? So another approach which you can do here is counting only the value added to a product by each firm in its production process. We call it value added approach. Can you read this and see whether you can understand? Look at this illustration. I think that would be easier. You are looking at only the value addition part, right? So in any production process, there are stages or phases. First stage, second stage, likewise, right? So you can count what is the value added at each stage. Okay. Now, for example, here, the example which is taken here is gallon of gasoline. So gasoline in the sense is a crude oil, right? So in crude oil production, right, there are different stages of production. First stage is oil drilling, second stage is refining, third stage is shipping, fourth stage is retail sale, right? So what you do is, you try, without looking at the final value of the sale at individual stages, you look at the value added at each stage. In the first stage, oil drilling stage, what is the total value added? Okay, so that will be the initial stage, so the total value added will be $3. Then when your product moves from oil drilling to refining stage, what is the extra charge, extra value added from first stage to second stage? Right? Here you can see at the end of refining process, they sell the refined crude oil for $330. But when the product entered into the process, it was $3. Entered at $3, exit at $330. So the in between the stage, the value added is 30 cents, right? So that portion you identify. Then the third stage. In the third stage, the product entered at 330. When it's leaving the stage, it was 360. So again, in the third stage, there's a 0.3 value addition. So you take that value addition separately. In the fourth stage, there's a 0.4 value addition. So you take the value additions separately. So you know at each stage, this is the value added, right? And those value additions, you try to combine them together and see. Then that comes into final value of the product. Okay. So when you try to identify only the value added part, it won't get double counted. Otherwise, if you look at the final sale value at each stage from each firm, then it's getting double, triple counted value, right? But you only look at each stage value addition. We know that firm is responsible for that value addition and nobody else can count for that. So you kind of combine all the value additions and identify the total value added. So that is called value added approach. Okay. So that is one way to avoid double counting, right? So in calculating GDP, we can sum up the value added at each stage of production, or we can take the final value of final sales, but there's a problem when you take the final value. That's what I earlier said. Okay. We do not use the value of total sales in an economy to measure how much output has been produced, because that will create a double counting issue. Okay. And another way to avoid double counting is not counting transactions in which money or goods changes hands, but in which no new goods and services are produced. Now, what does GDP try to measure? Gross domestic product or gross domestic production. What is the total value of production which has happened in this country for this year? Right? So you only should account for production value. But do you agree there are other transactions which happen in a country which is without any production? There's no production, but sale of items are happening. Now, for example, let's say resale of an item. Let's say a vehicle, a car gets resale, right? So it has not been produced in the last year. It has been produced way back. But you resell your car, you sell your car to someone else and you earn an income. That's a transaction. But is there any production which has happened? Just that the product has got exchanged between two people and there's some money flow. But is there any production? No. So such transactions will not be counted under gross domestic product. Why? There's no production. So if you sell something which you already had, which was produced long time ago, like a resale or something like that, even though there's monetary flow, even though there's a transaction, you don't count that in your national accounts because there's no production which has happened in that year. Is that clear? And also you have to exclude the output produced abroad or by domestically owned factors of production. Okay? So GDP is the value of output produced by factors of production located within the country. Let's say some of your factors of production was abroad and they produce some good or service. Can you count it your GDP? No, because that factor of production was not located in Sri Lanka at that year. Okay. Now, for example, labor has migrated, gone abroad, and has done some production. Can you count it for your accounts here? No, because that factor of production will not any longer belong to your country. It has moved outside. So only the factors of production which is located in your country, whatever that produces, you can count under GDP. Okay. Those are ways in which you can avoid double counting error. Any questions on that? Any questions? The ones who are falling asleep, I assume that you know these things already. So please be prepared that I will ask questions. So that I guess you all already know these things. Okay. I'm sorry that this is a very theoretical lesson. Because theories have to be put in first before you start doing calculations, right?
is it's one more domestically own practice of production.
Then it has to be foreign firm. All factors in production should be domestically. So as to calculate it under GDP. A foreign firm cannot produce goods and services by utilizing all factors of production. They have to be situated here. Here. In all factors, land, labor, capital, entrepreneurship, all should be belonging to our country for us to calculate it under our GDP. Offshore companies also count. Because if they are not using all our factors of production, that cannot be done. Okay? Okay, calculating GDP. So how can we calculate GDP? That can be computed in two ways. One way is adding up the total amount spent on all final goods and services during a given time period. Total expenditure you spent on goods and services. That is called the expenditure approach, right? The other way is to add up the income received by all factors of production producing final goods and services, which is called the income approach. We discussed about it earlier. So you can take the expenditure approach or income approach. Basic place you can start is the production approach, but that is very straightforward to calculate GDP using production approach. So we are going to focus on these two because these are indirect ways of deriving at your gross domestic production, right? Expenditure approach and the income approach. So in expenditure approach, you look at the expenditure aspect. How much you spend on goods and services. In income approach, you look at the income aspect, like the income you generate by the factors of production, which is used for production of goods and services. Clear? These two methods lead to the same value of GDP because every payment or expenditure by a buyer is at the same time received for the seller. Do you agree with that? That's what we initially discussed under the circular flow diagram. Everything which somebody spends, like, you know, every pay, for example, every expenditure incurred by the firm will become an income for the household. Everything which households spend will become an income for the firm. That's how the circular flow diagram was in equilibrium at all times. So all your expenses will become somebody's income. Somebody's income will become your expenditure. So always income value equals to the expenditure value. So whether you calculate GDP using expenditure approach or the income approach, the two values should be equal at the end. Now first let's look at the expenditure approach. A method of computing GDP that measures the total amount spent on all final goods and services during a given period of time. Right? So using the expenditure approach, this is how we calculate the GDP. Okay? C plus I plus G plus net exports. Okay? C demonstrates consumption spending by household. So one spender in the economy is who? Households. They are one party who spend, who incur expenses. Okay. So what do they incur expenses? To consume, on buying goods and services, right? So one expenditure in the economy is consumption expenditure, which is demonstrated by C. Then the other expenditure is incurred by business organizations, right? On what do they spend their money? Business organizations
The production.
to the production process, right? Consumers spend money on consumption, buying goods and services to consume, right? Businesses spend their money on producing goods and services. We call it investment. They are making an investment in the production process. That is where the expenditure lies, right? So businesses' expenditure is captured under investment, which is denoted by I. Then the third part in the economy is government sector. So what do they spend money on? Yeah, so they spend money on any goods and services the government consume and but to provide subsidies for the people in the country, right? So that entire portion the government spend money on is captured as government spending on the purchase of goods and services, right? Even subsidies they give to people as a good or a service. So everything they spend on goods and services. So that is captured as government spending, which is denoted by G. Okay? So households, businesses, government is captured. Then comes the foreign sector. Now foreign sector spend money on what? Foreign sector spend money on what? Foreign sector.
Exports.
Foreign sector spend money on exports. They buy our goods and services, right? So they spend money on exports. They spend money on buying what we export, what we sell them, right? So their expenditure is exports. But we know at the same time, we are importing goods from them as well. So usually foreign transactions are happening in dollars, right? So we earn an income of dollars in terms of exports. But at the same time, using those dollars, we are also buying certain foreign products from them. So that should be deducted from these exports value. Because we are making payments to them again using the same dollars. Export income එකෙන් generate කරන dollars වලින් තමයි imports වලට pay කරන්නේ. So exports minus imports is the net expenditure by the foreign sector. Is that clear? Which we call it net exports. Net exports is demonstrated here. Okay. So is that clear why we take net exports there? Foreign sector's expenditure on us is export. They spend on exports. That's income to us. That's a different story. But their expenditure is exports. But from that export money, අපි imports pay කරනවා. එතකොට ඒක net off වෙලා තමයි රටට එන්නේ. In only net value comes inside the country. So that is why we only take the net export value. Okay. So net exports is the foreign sector expenditure portion. Okay. So total will calculate the GDP. Is that clear? So using this approach, we can calculate GDP. Okay. Now, මේවට එනවා ගොඩක් එක adjustments. Now I'm not going to discuss about them. I'm going to first of all put the basic concepts into your mind. And later on, let's see if the time permits. Then make a basic formula. මේවට එක adjustments එනවා. ඒ දේවල් we'll discuss if we have time. Okay. Any questions on this? Any questions on this? Then the other approach is income approach. Okay. The same thing, GDP can be calculated using the income approach. Now, in the income approach, what we look at is the income generated by the factor owners by selling their factors of product factors which they own to the firm in order to produce goods and services, right? National income is the total income earned by the factors of production owned by the country's citizens, right? So here I have taken an illustration and shown roughly, but when you are calculating, there's no stick formula for it. Whatever the income you generate out of selling factors of production can be combined together and you can calculate GDP. So your rent income, wages, interest income, then your profit income totaled up together should give you your GDP value. But as I earlier said, there are adjustments which are coming in, right? That will be discussed later. Okay. Now look at this. In order to calculate national income, they have taken one is compensation of employees. Compensation of employees means salaries or wages, which is earned by providing the factor of labor, right? Then proprietor's income in the sense that is by providing entrepreneurship, the income what you generate, the profit, right? Proprietor's income. Then rental income is generated by giving land or any natural resource. Then corporate profits are earned by business organizations. Okay, so here the entrepreneurship income has got divided to two parts. One is proprietor's income, the other one is corporate profits. Proprietor's income is if you are having a sole proprietorship. But if you are having a corporate, then your profit will captured under here. Then net interest and also the government income is also captured here. Government income is taxes minus subsidies if they have anything left over. And net business transfer payments, sometimes certain business organizations also make transfer payments. They also make, just like the government, they also make transfer payments to various parties in the society, right? So that is also captured here. And then also there are government enterprises. They also might be earning some money and they also will have an income. So government enterprises surplus they generate also captured here. So likewise, whatever the income generated by the economic agents in an economy should be totaled up together and identify the total income of the country, which will be equal to GDP. Clear? So likewise, from country to country, what comes in your as your individual line items in your income account will differ. Different countries source income from different sources, right? So accordingly, your GDP calculation will differ. Is that clear? So that is the income approach. Any questions? If there are losses, it will be deducted, right? If there's a loss. Now here you can see it's a negative. So even government enterprises are also an organization. If they make a loss, someone else out there might be paying for it. So that has to be deducted from the total income. Because always the economy is at equilibrium. If one party make a loss, someone else is paying for it from the other hand. Okay, any questions? Okay. So that is in very simple form, I tried to cover the national income accounting, but national income accounting is very broad. And there are so many adjustments which come into play, like how the taxes get adjusted. Even in investments, we get the net investments, and how, like when you're, when you're trying to equal gross domestic production to gross domestic expenditure to gross domestic income. When you're trying to when you're trying to achieve this situation, there are certain adjustments which has to be done. I only put the concept to your mind. This should always be equal to each other. But මේ calculation එක මෙහෙම එකපාරට කරපු පමණින් මේක equal වෙන්නේ නැහැ. අර accounting වල කරන adjustments වගේ මේවයි තියෙන පොඩි adjustments කරන්න. හරි. That we'll try to do if time permits. In a syllabus it doesn't say ටික කවෙන්න ඕනේ කියලා. But if we have time in future, we will try to cover those adjustments and do some questions also from that. We'll see. Okay. And now we are going to look at the benefits of national income accounting. Why national income accounting is important. Okay, before going to that, can you quickly, I'll give you 2 minutes. Okay, 2 or 5 minutes. Quickly think, what are the benefits of this national income accounting, and jot down something. Think for yourself why it's important to do national income accounting. Write down at least 1 or 2, 3 points. Okay, are you done? Can you all tell me what have you identified as benefits of national income accounting? Very, that is a good one. Can you tell me something to? Okay, good. Government tax. Okay. Sorry, there's taxes and taxes. Performance of. Yes, sir. Yeah, okay. Yeah, okay, to get foreign child election, clearly. And there is a main distance. Okay. Okay. Take its investment decision. What do you mean by segments? This is advice, your example, plantation. And manufacturing, agriculture industries, sector-wise decision.
Right, in certain activities in the country. And how to develop.
I'm down for locations.
And what's the government possibility of government? Right? Sorry? I would help for all. Okay.
Understand the distribution of income as liability.
Distribution of income and payroll. Yeah, that is definitely a thing, right? To identify the national income growth, whether you're growing or declining. Okay?
Budget, income and expenses of the country. Budget. Activity.
Mostly comes from the performance to the.
Okay.
Find out the industries, sometimes we find careers or motivate them. discourage Canada industries
Why do you discourage an industry?
for the human beings, well, good. So we can discourage.
Okay. Okay, so you all have listed out some good benefits. Just see whether these are there. National income figures are important tool to macroeconomic analysis and policy making, right? Any country and government engage in policy making. So when they are making policies, they have to take national income accounts into play. And these statistics are very important for long-term and short-term economic plan, right? And also these national income statistics enable us to have an idea about structure of the economy. What is our economy structure? Do we have more agricultural sector, industrial sector, or service sector? It gives us an idea about the structure of the economy. In Sri Lanka, what is the structure? What is the most contributing sector for the economy? Agriculture. Then comes industrial. Then comes services. But in a developed nation, what is the most contributing sector?
Yes.
Industrial and services. Services sometimes more, right? So that structure of the economy, because even the agriculture, even in developed countries, there's the big agriculture sector. But usually the value addition from the agricultural sector is low. You can generate more profits, more value addition in service sector, right? So the value-wise service sector value will be bigger, right? Also, this national income accounting will give us an idea about inflationary and deflationary gap. Like whether this country will have inflation or deflation, that idea we can take by looking at national income account. Governments to prepare their budgets within the framework of national income data and try to formulate policies according to the facts revealed by the national income specific. So some of you all said that in order to prepare the budget, government budgets, we need national income accounts. And national income studies, it shows us how the national expenditure is divided between consumption expenditure and investment expenditure, right? So if you go by expenditure approach, we will get to know as a country, do we spend more money on consumption or investments, right? We can identify how our expenses are spent on consumption or investment purposes. So what should be encouraged is investment expenditure mostly. And also national income accounts, using that we can get an idea about the standard of living of the people in those countries. Okay, so we can compare countries using national income accounting. Okay, because the GDP, that value demonstrate the standard of living of people. So you can compare across countries or you can compare across time periods. Year-on-year comparison also can be done, right? It helps us to divide the national product between defense and development purpose, right? Whether we should mostly spend our expenditure on national security or defense or on development projects. That is showcased in the national income account. Also, these national income figures enable us to know the relative role of public and the private sector of the economy. Who is playing the most role in the economy, private sector or public sector? We can get an understanding by looking at the national income accounts, right? These are some of the benefits of national income accounting. So you can figure that out, whatever the points which you did not think of, you can add them to the list, right? Okay, so shall we take, now we are moving to the next section of this lesson. So shall we take about 10 minutes break? Before that, earlier I only gave you 5 minutes. So let's take about 10 minutes and then move to the next section of this lesson. Okay. Now it's 3:40. 3:45, then relax. Wait, 3:40. 3:45. Be back at 3:55. Is everyone back or there's more to come? Those who are at the back, there are a few more, no? Okay. Signing sheet, you are sending it again, no? Okay, so now we are going to we kind of covered what is required for national income account, and now we are going to talk about economic growth and development. Right? So it's a very common term. I'm sure everybody knows what is economic growth. What is economic growth? Because that's something which we talk very often. Even in news you hear it, everywhere you can see that. So what is meant by economic growth? Growth means, okay. Something is expansion. What is expansion? Income of the country.
Reserves, increasing reserves.
Increasing reserves.
Foreign
Okay.
reserve.
What else? Increasing production. Sustainable is increasing what? Income of. Okay, so some of the ideas are correct. Some of the ideas, I feel like you all have kind of mixed up also. But we will talk about all, right? So economic growth in simple terms, it is the growth or continuous expansion in the real gross domestic product over a long period of time, right? So economic growth is simply the growth in the production of the country. Growth in terms of the gross domestic product you have achieved in the country. So you can calculate economic growth year on year, right? So let's say you can calculate economic growth versus 2022, sorry, 21 versus 2022. Okay? Or else you can take another year as a base year, and upon that you can calculate the economic growth, right? So all what you are looking at is GDP. Okay, what is the growth of GDP in 2021 if it's this amount, in 2022 by how much, in what percentage has it increased? So economic growth is simply measured by looking at the growth of the GDP, gross domestic production. So you're looking at the total value of the products you have produced in the country this year versus the last year or the previous year, right? So we say a country is having an economic growth if the country demonstrates a continuous increment in their gross domestic product. Continuously year on year, if your total production of goods and services are increasing, then the country is growing, that economy is growing, right? Simply, that's the definition, right? Reserves and other stuff don't come into play here. Only looking at the gross domestic production. Whether it's sustainable or not doesn't really matter. Okay. So this is a quantity side increase. We are only looking at the quantity, gross domestic production quantity or the value. That's the only thing you look at. So it's a real quantity side increase. So you're looking at the real output of the expansion of the real output of the country. Okay. So when countries' production or gross domestic production is increasing, that also demonstrates that countries' production possibility is increasing, or rather, countries' production potential is increasing. So that will demonstrate an outward shift of the country's production possibility curve. You have learned about PPC, no, in the first lesson? Okay, very first lesson, I think you still taught you all. So if this is country's PPC, an economic growth will demonstrate an expansion of your production possibility curve. This PPC curve, it expands because your production possibility potential to produce more and more is expanding if there's economic growth. So it will demonstrate an increase or expansion or rightward shift of your PPC curve, right? And economic growth is measured by a continuous increase in country's real gross domestic product or gross national product, right? If you want, you can draw this. If you want to make any notes, you can make. And what are the possible reasons for economic growth? How could an economic growth? In other words, how can an economy increase the production possibility, production potential? You continue the economic situation or the environment just as it is now for the next year also, you can't expect an economic growth. The government or somebody wants to achieve economic growth. There are certain things you have to do. If you have the same situation, same environment, same conditions next year also, that means your production possibility from here, your potential is only here. Right? It cannot expand further. There are certain things which you have to do to expand your potential, or in order to achieve economic growth, there are certain things you have to do for next year. Sorry?
Increasing production.
Yeah, increasing the production, how can you do that? Now, when you were doing PPC, I think you all would have learned, using the maximum amount of resources, maximum productivity and everything, this is the maximum you can achieve in the country. So by just being here, you can't really expand your production also. There are certain things you have to do in order to expand your production, to achieve economic growth. Because at this point, you have reached your maximum capacity. What are the things which you could do?
And then employment opportunities.
So that is also maximum, reached maximum here. Maximum employment, maximum resource utilization, everything. Sorry? Capacity. How? Okay. Increasing the factors. Yeah, one way you can do it is by increasing the stock endowment or economic resources in the country, or in other words, factors of production. If you can increase it, then you can achieve economic growth, right? Increase your stock endowment. How much of resources do you own? Increase your resource endowment. You can increase that. You can increase your production. There will be more factors of production for you to produce more. Then only you can see a shift of your PPC curve, right? So these economic resources can be increased either by increasing your physical capital, physical resources, or increasing your human capital, natural capital, or social capital, right? So what do you know what this means? What is meant by physical capital? Sorry?
Manufacturing.
Physical capital, physical resources.
Manufacturing.
Sorry?
Manufacturing.
Yeah, manufactured capital. What are those? Yeah, infrastructure in terms of machinery, equipment, buildings. You have other infrastructure you have. You can expand them. So if you have more machinery, more, let's say, equipment, tools, and more buildings, things like that, then you can expand your production, right? That is physical capital. What is meant by human capital? Okay. So labor force as it is won't become human capital. Labor force is labor force. To make them human capital, what do? Yeah, you increase the quality of the labor force, right? So quality of the labor force, as you said, can be increased through training, by increasing their skills, knowledge, experience, right? Their know-how. So many things can be enhanced to make them human capital. So if you can enhance the potential to produce more, either through giving them new skills, new knowledge, new experiences, things like that, you can improve their ability to contribute to the economy, right? And accordingly, you can expand your potential, right? And so basically, you have to enhance the productivity of the human capital. What is meant by natural capital? Sorry? Okay, examples. Okay. Mm. So natural capital can be natural resources. No? So if you acquire new natural resources, now long time ago, these during this colonization time, what countries try to do is, let's say, for example, UK, what they try to do is they had a very limited natural resources, they had limited land. So in order to grow and expand the economy, they went on, capturing other countries. simply to expand their natural capital. They went and, captured other countries, like especially in this part of the world, Asian countries and all of that, to expand their land or access to natural resources, right? So that was happening before now. That was a forceful capturing of countries, but nowadays you can't do like that, right? So how would you enhance your natural capital nowadays? Yeah. For it's you're kind of creating artificial natural capital. That could be one way. Or else, nowadays what you can do is probably as what China does also. Now they identify strategic locations, they pay for it, and they capture it without not through war or anything like that. Also, you can improve the usage of natural resources by using technology or things like that. As you said, finding renewable energy sources or finding new resources like mining resources, or find, let's say, now we know the crude oil is available only in Gulf or this Middle Eastern countries, but now they are trying to do research and find out other places where it's available, and they are investing on those things. So searching for more natural resources, through that you can increase the amount of natural resources a country owns, right? So that's natural capital. What is meant by social capital? Social capital. Is that important for economic growth? What is meant by that? Yeah, can be norms and traditions also. And it's basically unity or trust and understanding among individuals in a society, right? So in a society, individuals in a country or society, if they have a good mutual trust and understanding, harmony, and things like that, okay, then they are very united. And that will help for the country's growth and development, right? So they can work as a team together. So when they are working as a team together, productivity will improve, right? So that mutual trust, understanding, and unity in a society becomes an asset. That's why you call it social capital. If there are too many conflicts, too many segregations, too much of war happening within the country, it actually destroys that country's potential to grow, right? Because you are mostly focusing on solving conflicts and solving differences among the members rather than trying to grow as a country. Okay, so social capital is also a very important aspect when it comes to achieving economic growth, right? So those are the four types of capital, or rather economic resources. If you try to improve these four economic resources, you can expand your country's growth potential. Is that clear? So if you want, you can write down these explanations I gave. What is physical capital, human capital, natural capital, social? So physical capital is simply referred to things like machinery, buildings, equipments, man-made capital. Human capital refers to, if you want, you can take down quality of features of laborer, quality of features of laborer, such as knowledge, skills, abilities, and experiences that contribute to the productivity of the human resources within the country, within an economy, within an economy. Natural capital refers to increase in stock of natural or land resources mainly in the form of investments to discover and protect new land resources such as natural energy deposits. For example, crude oil resources. Social capital emerged through mutual trust and understanding among a group of people in the society who work together with the aim of achieving common welfare-based objectives which benefits the society. Now, some examples for the social capital could also be, now, for example, in a country, like as a whole, overall, the mutual relationship which is there among people. But also, let's say, now, like in industries also, there are some societies which are there which help to improve that particular business or industry. For example, there can be farmers association where all the farmers get together, try to solve their problems together, and that helps to improve the agricultural sector industry. So that is also part of social capital, right? Or any other like these social groups can be considered for social capital, right? Now, for example, these charity organizations which are there in the country, which help to improve the social welfare of the country, or like these things like Women's Association and things like that, which help for improvement of the society, will come under social capital, right? Okay, so you can expand the production possibility curve by expanding the stock of resources you have. How much resources you own as a country. The other one is improving the productivity of these factors of production. You don't increase the quantity of resources, but you increase the productivity of the resources. Yeah. These are the ways in which you can improve the productivity. One obvious way is using technology. Using technology, you can improve the productivity of land, labor, capital, everything, right? Then through innovation, coming up with new ways in which it can be you are innovating a product or you are innovating a production process. Sometimes we can simplify production processes through innovations which can improve the productivity of the resources, right? And through improving management methods, coming up with new management methods like total quality management and then just in time and different management methods. Horizon, this, that, there are so many management methods through which you can improve the productivity of the factors of production. Then research and development, right? Through spending more, investing more time, energy, money, everything on R&D aspects. If you take countries like Japan, how they have achieved economic growth is not by increasing their stock endowment, but simply by focusing more on the productivity aspect. So year on year, they come up with technology, innovation, new management methods to improve the productivity. And they are trying to take the maximum usage out of the existing resources. Hope you all know that Japan, after the World War, they started at zero. They did not have any resource. Most of the natural resources were destroyed. Even the human resources were destroyed, dead or partially disabled or things like that. And social capital, everything was destroyed. So how they built up as a nation is by not capturing anybody else's resources, but focusing on the limited resources they have, try to take the maximum productivity out of the existing resources. So that's why they spend so much time, efforts on improving the technology. Using technology, so if they have less number of people, if they have 100 people, they try to use technology so that they can take work from those 100, which is equal to 1,000 people, right? Still, the Japanese continuing the same traditions, right? So they are how they grew as a country step by step is entirely focusing on improvement of productivity of the existing production factors, right? Basically, they focused on technology, innovation, management methods, R&D, things like that. And also by improving your tax system and regulatory system, rules and regulations in the country, if you can make it very efficient, productive, practical, things like that, you can improve the production. Then developing the financial system. The banking system, the financial system also should be improved, which can help you to improve the productivity of the economic activities, right? So those are another reasons. Then in order to achieve economic growth, it's very essential to have macroeconomic stability. Now, in a situation like today, what we are facing in Sri Lanka, it's not possible to achieve economic growth. We are still struggling to sustain the economy, not to grow, but sustain it as it is without having a decline, right? So macroeconomic stability is very important. And also it's very important to have overall good governance. Good governance in both private sector as well as public sector, okay, to achieve economic growth. And political stability is a must. Okay. These are the reasons which are contributing for economic growth. Is that clear? And what are the advantages of economic growth? Benefits of economic growth. Okay, good. Living standard of people will improve. What else? Why do we strive or why do we struggle to achieve economic growth? Right? Completely okay. In order to, for what? Why do we compete with other countries?
So.
Okay, to attract more investment. Okay. What else? To get additional loan. Loan is not a good thing, no, like if you can survive by yourself, good. But yeah, okay. To attract loan for investment. What else?
Reduce the purchasing power.
Reduce the.
Purchasing power. Because
Okay. Okay, you can say that. Like when you have economic growth as a nation, you will become richer. But that doesn't necessarily mean the parity will reduce. But still, you can grow as a nation, which has a some ripple down effect on the poor people as well. What? What are the benefits of economic growth? Economic growth simply expands your production capacity, stock of capital, and productivity in an economy, which is the obvious benefit of economic growth. And when there's economic growth, that means you're producing more and more goods as a country, right? So consumers will have more and more goods to consume. So your choice will be higher. You have more products to choose from, right? So that's a benefit for the people in the country. Promotes investment, right? If you have economic growth, that means you're producing more, you're expanding, that means you're attracting more investments to the economy. And it also creates more production means what? As a business, you're expanding, that will create new employment opportunities as well for the people in the country. Economic growth is an essential requirement in the process of eradicating poverty, as you said, and unemployment problems. Because more production means more employment opportunities, so unemployment problem will reduce and it will help to reduce poverty to some extent. It will have a favorable economic, social, political, and institutional framework to achieve economic development. Now, later we will learn what is economic development. In order to achieve economic development, economic growth is a must. That's the first condition. You have to achieve an economic growth. Then only you can go for development. When we were doing A-levels, we were very happy that Sri Lanka is having some economic growth, and we were looking at ways how Sri Lanka can achieve economic development. No, that's I guess even that's what you all learned as well. So we had very good percentages of economic growth, consistent economic growth. ඔක්කොම තිබ්බා. අපි ඉතින් ආවිද ඒක ප්‍රශ්නයක් නෙමෙයි. දැන් අපි develop වෙන්න ඕනේ. We have to become a developing nation. So now again we have gone back trying to struggle economic growth now. So those are the advantages of economic growth. Now, sometimes this economic growth comes at a cost. There are negative aspects of economic growth as well. We call it opportunity cost of growth, foregone benefit of current consumption. Now, economy is growing means you are trying to produce more and more product at the present, at the current moment. Okay? So you are spending so much energy, efforts, resources to expand your production for current consumption. So you're using more resources for current consumption means what? What are you sacrificing? What is the foregone aspect of it? What is the opportunity cost of current consumption? Sorry? Future consumption. If you use all the resources available today for current consumption, that means you're depleting resources. Natural resources are depleting. That means your future generations will not have sufficient resources to consume. Is that clear? So if any country is trying to be very competitive and trying to achieve so much of growth currently for different purposes, that means you're using so much of resources, land, labor, capital, everything you're using so much now to achieve growth rates. Sometimes unnecessary production, which is really not needed for you. Now, you look at most of the countries in the world, we are in an overconsumption situation. We are in a very consumerist economy, right? Focusing on consumption. But do we really need all of that consumption? Do we really need all those products out there? Even if you take food industry, how much of options are available? Do you really need that many food? No. Excessive consumption today means there won't be any resources for future consumption, for future generations to consume. So there's a huge opportunity cost of achieving excessive growth rates now. The negative impact is on the future generations, right? So excessively focusing on economic growth, you're foregoing the future generations' consumption, right? And also there are negative externalities created through the rapidly expanding production process on the environment and society as a whole. So if you are trying to produce more and more and more goods and services, that means what? There are negative externalities of production, right? Especially look at these industrialized based countries like China, Thailand, or let's say India, even becoming a very industrialized country. There are a lot of negative externalities. They are so much focusing on production, highly industrialized. And there are a lot of negative externalities such as pollution, right? Water pollution, air pollution, land pollution, right? So you can see how those air come to our country as well. India's air pollution travel all over the world and how that affects the people's survival, right? So those are negative externalities due to rapid expansion in production. Not something we as a earth can absorb too much of production. Okay? China is also similar situation. Highly polluted country. Air pollution is very high in China and then India. Then depletion of excessive use of available natural resources, especially non-renewable resources, leaving less or no resource for future generations, right? So non-renewable resources like crude oil, you can see it's depleting at a really high rate. And that's why the prices also are increasing in the market, right? Therefore, economic growth should be achieved in a manner which minimizes the negative impact on the environment, society, and future generations. This is where a country should strive to achieve sustainable and balanced economic growth. Okay? Economic growth is naturally not sustainable, right? But we have to strive to achieve a sustainable and a balanced economic growth so that we would leave some resources for the future generations as well. Okay. So always economic growth is not a good thing, right? Small percentage of economic growth is okay, but it's not a very good thing. Next, we are going to go focus on economic development. Now, what's the difference between economic growth and development? That is one of your learning outcomes. Identify the difference between economic growth and development. What is the difference? Okay. Anything else? Okay. Any other idea? Economic development is a process whereby qualitative standard or aspect of all human lives shall improve. Economic growth was only focusing on production growth, growth in gross domestic product. But in economic development, what we look at is not the growth in gross domestic product, that is also inclusive, but we are basically focusing on whether the standard of living of human lives in the country has improved. Compared to last year, this year has the people's living standard. People in the country have their life standards improved. That's what we check in economic development. Then we call it development, right? So a development process needs to essentially consider a true improvement in aspects of living standards of people. So when you are looking at living standard, it talks about satisfying basic needs and wants, and also whether the income level improved, has their health improved, has people's education levels improved. So you look at all those aspects, right? And whether there is a political, social, and economic environment, and is there an institutional framework which is conducive in improving self-esteem and social standing of general public. Okay? So in an economic development situation, we also look at whether the benefits of economic growth has it been equally distributed among people. Now, economic growth you can achieve, but if the benefits of economic growth doesn't go to all people in the country, there's no point, right? If the 80-20 rule applies now, you might have learned that 80% of the income is enjoyed by 20% of the people, and 20% of the income is enjoyed by 80% of the people. That's why we have that disparity among rich and poor. So if that's the case,